right, here we go. Welcome back, everybody. We are just a few seconds away from that November jobs report. Again, ahead of the numbers, we've been watching the futures, and things have been held in a very tight range this morning, kind of bouncing around. Right now, those Dow futures are down by about 25 points. The S&P futures are down as well, but down by less than 3 points. A lot of expectations that this will be a relatively weak number because of what happened with Sandy. Again, though, we'll get those numbers in just a moment. CNBC's Hampton Pearson is standing by at the Labor Department, and he has those numbers.
Up 146,000. November non-farm payrolls increased by 146,000 jobs. The unemployment rate is 7.7%. Average hourly earnings up 0.2%. The last time we had unemployment rate this low was in December 2008. Private sector job growth last month plus 147,000. However, we had downward revisions for both September and October, 49,000 jobs fewer than what had previously been reported previously. On the question of Hurricane Sandy and its impact, the BLS says, quote, it did not substantively impact employment and unemployment in November. December 21st, 2 weeks from now, there'll be a better barometer when we get new data from the states. Job gains in November. Retail trade plus 53,000. Professional and business services up 43,000. Leisure and hospitality up 23,000. Job losses, construction down 20,000. Manufacturing down 7,000. Now, again, back to Hurricane Sandy. From the commissioner's statement, the storm we know happened on October 29th. The next pay period ended on November 12th. The way BLS essentially keeps score, it says workers have to be off work for the entire pay period to be counted on the negative side. On the household survey side, persons who miss work for weather-related events are counted as employed, whether or not they are paid for the time off. We did have a drop in the labor force participation rate, down 0.2 to 63.6%. How did we get to 7.7% unemployment? Basically, the number of unemployed persons dropped more than the number of employed, and there were downward trends in both those categories. Lots to chew on. Back to you guys.
All right, Hampton, thank you. We are kind of scratching our heads. Let's get some more reaction from our panel. Mark Zandi and Jared Bernstein are with us. Rick Santelli joins us from the CME in Chicago. Steve is right here on set with us. Mark, what do you make of these numbers? Is this a number we believe or not? Because we had set this up as numbers that were not going to be things that we watch very closely because of Sandy.
Well, I'd say two things, Becky. First, I think these numbers will be revised as they get more information. The survey responses probably were very weak coming from New York, New Jersey. They didn't supplement them, it sounds like. And once they get that information in, my guess is we'll get some big revisions next month to be more consistent with what all of us are thinking. The second thing, though, I'd say is that, underlying Sandy and all these other technical measurement issues, it looks like the job market is holding firm, which is encouraging in the context of all this fiscal uncertainty. So that's a real plus, and that's shining through in this data.
Becky, I just want to chime in here. The revisions, it's just head-scratching. They revised down October government employment from originally 13,000 to 51,000. Now, first of all, I don't remember seeing a revision to government employment that big, but the notion that government can't count the amount of workers in government is a little bit beyond the pale, and maybe
revised it down to 13.
Revised down from minus 13 to minus 51. So it's like a, I don't know, what do you call it, a 38,000 downward revision. And they revised up the private sector in the month of October, so that was good. The other thing is, it's very hard for me to believe here that there is not a Sandy effect, in that I see a minus 22 and a minus 20 on construction. Mark, would you just chime in on that? I mean, I guess even if Hampton is still there, I don't know. They're saying there was no Hampton, no Sandy effect, but I'm seeing a minus, 42,000 on construction and goods producing. How can that not be?
Yeah, no, I think that's some of the Sandy effect coming through. With Katrina, what the BLS did is they made some adjustments for the fact that they got a lot fewer respondents from the people who were affected by the storm. And my guess is this go around they decided not to do that for whatever reason, wait for other data to come in. And once we get that data coming in, they will revise down. And what you're seeing in the construction jobs, that makes no sense. That's not consistent with what's going on in the construction trades, and that probably is Sandy effect. So it's probably bleeding through, but we'll see more of it. One other point, Steve, about government. If you remember back a couple months ago, we saw really huge upward revisions to government employment, and now they seem to be taking it back. Right. So they can't quite figure out what's
Hampton?
going on there.
Hampton, can we just go over again, Hampton,
yes.
what the government said about Sandy here?
Well, we only got these blanket statements, as you said, as far as no substantive impact, but specifically on the surveys in the affected states. They said that even despite the superstorm, the responses to the survey was, quote, within normal range. So no big swing there. That's another head scratcher, though, in my way of thinking.
A couple of things jump out at me. First of all, this looks like one of those months where the gains in unemployment, the reduction in the rate, comes more from a decline in the labor force than more jobs. So you can, the employment on the household side looks like it didn't grow at all, which is actually fairly consistent with the past 2 months being large positive outliers. But look, here's something I don't think we've mentioned yet. The average work week was unchanged in November, and in fact, the manufacturing work week edged up 1/10 of an hour. Again, not what you would have expected given Sandy. I agree with what folks were just saying on the construction impacts, but I also think that this report suggests that the underlying trend in payrolls, which is about 150K per month, which is about consistent with trend growth in the GDP, maybe a little bit better, it does come out of these numbers, and that is a good thing.
Hey, our guest host today is Dan Gilbert. And Dan, you said earlier in the program that in terms of what you see in the housing market through Quicken Loans, the most important factor is the jobs market. Based on what you see in the housing market, how does that jive up with these numbers?
Well, I think, we have seen pops in various geographies and various cities and regions in the country both on the new home purchase side and existing home sales, but hasn't been a boom by any measure, and it's certainly not broad across the whole United States. So, any employment numbers that are good are certainly good for the housing market. But because I think with these rates,
do you buy numbers like this, or do you think that this is like some weird stuff that's happening because of Sandy and others?
For me, when I look at these numbers, they're a little bit foreign to me looking at it month by month like this. But I think that 1 month of data is probably not the tell-all here.
Hey, Jared. That's pretty good, and that kind of growth. I'm just wondering whether we need to frame the fiscal cliff debate a little differently, in that maybe the economy is strong enough to handle a couple of more near-term negatives than we thought it was. I mean, Howard Dean says the best deal Democrats could get would be to go over the cliff where all the Bush tax cuts finally sunset. We seem like we're never going to let them go away for good, even though they were designed to go away. Does this mean it's time to maybe, a little more belt tightening than we thought we could have?
I don't think so. I mean, it's funny. I sort of take it the other way. The more I see momentum in the economy, the more I see improvement in the job market, the more I think what a terrible idea it is to go over the fiscal cliff and screw up a recovery that finally has a little bit of momentum with a housing market carving out a bottom underneath it for the first time in years. In a way, this kind of raises the stakes to get it right because we seem to be kind of on track.
Hey, Rick, did they take out did they add those government jobs to get to below 8%? Now they're taking them back? Is that what happened?
You don't want to go there.
I'm going to answer that, Joe.
I'll go anywhere.
He doesn't know, and I'll tell you what the number is. It was local government.
It was a joke. Go ahead, Rick.
It was local government education jobs.
Ask him. Go ahead, Rick.
How about 1 second, Steve? 1 second, all right? We lost 350,000 people in the labor force. We're at a time in our history where it's all about jobs and tax revenues. The only people who bring tax revenues to the party are people who work. And the discussion is mainly about the people that are working, that are way at the top. I urge everybody to read the op-ed by our buddy Peter Schiff today, because I've had so many discussions about, in the 50s, the tax rate was 91%.
Rick, that was great.
I'll tell you what, we have issues in this country, and data like this, and talking about, how much momentum we have in the job market, 350,000 people. Poof! Beamed to another planet. A 1954 Studebaker Lark has more momentum than this economy on the job side.
I like that, Peter Schiff, too. It was 91%. They don't have a figure of who paid 91%.
246 households.
That was at 81%.
Just like AMT was 400.
That was at 81%.
Right, not at 91. They couldn't find the records.
They don't have it, but 230 households.
The people that run the country on both sides of the aisle, they love to get elected, and they also love to fib about the statistics in any way they can. once again, I think my common phrase these days is shame on all of them.
All right, gentlemen, thank you very much.
Can I point out,
real quickly?
150K is the underlying trend, and that was the same trend before the election, so nothing has changed here with the election.
Mark Zandi, Jared Bernstein, Rick Santelli, gentlemen, thank you. And by the way, we should point out the stock market's certainly looking at this as good news, even if you believe these numbers are not at this point. The market did go from down about 20 points for the Dow futures to up by more than 56 points, so you did see a big jump.
Yeah, good.